Let's start with a quick look at the DXY and what the DXY is doing. So at the moment we are back testing the 50 on the daily, which is a big 50 EMA, which is a major EMA, to turn into support. At the moment it's a resistance, and it's been back tested with what looks to be a double top situation. But we have yet to see how today is gonna end, because if today manages to break above the previous peak, then we're looking at continuation towards the 200 EMA on the daily, and the 200 EMA on the daily would mean more downwards for BTC and ETH. So at the moment we are we're looking at this as a crossroads. It could be at the moment 50-50, I would say, for more continuation upwards for the DXY and downwards for crypto. At the moment, what we're looking at in terms of the context, the global context, with the news coming out this week, is the big CPI data coming out on Tuesday. So that's why the bulls and the bears are at the moment waiting to see what's going to happen with the inflation data. Because if inflation shows easing, then the bulls will likely continue the lift for both the stocks and the coins in the coming month. If inflation doesn't seem to be decreasing, then the bears will likely continue the correction. So here we are, holding resistance for the DXY and holding support for the coins. Now, if we're looking at the SPX, on Friday we closed with a candle that is above the 20 MA, so it's still holding above the 20 MA. We had at the moment we're having the 50 EMA coming up to meet the 200 EMA, and if they cross here, it's going to be a golden cross for the S&P, and that will continue the rally to the upside. If they don't cross, and if price action continues its correction downwards, then we are looking at more downwards momentum for the coins as well. Now, I will be talking about the levels for the week, but most importantly I will be talking about the general fundamentals, because we are at a crossroads for BTC. Here is the daily chart, and the daily chart at the moment is meeting support. We are below the 20 EMA, and we know that tends to change market sentiment, and the sentiment didn't start on the positive note this week. It started with a dip. However, there were buyers for that dip. Last night was bought quite quickly. As you can see, the past 4 hours have had nice wicks at the bottom, showing that there are buyers and orders to be filled around the 21.5 area. However, there is a sell zone around 22k. Again, you know how BTC loves its psychological levels around the 1000 mark. So we have 22k, we have 23k, we have 24k. So all of these $1,000 worth of psychological thresholds are closely followed. So now I'm just gonna quickly show you the daily with the levels. I've already posted it in the chats. The weekend was a sideways weekend. I hope you enjoyed it. Don't wait on price action at the weekend, because the big moves happen during the week when volume kicks in. So we are below the 20 EMA. I think we're going to head down to at least the 55. The 55 might catch it, and the 55 will also be in line with a minimal correction of the swing down to a 0.382. So 0.382 would be great, 0.5 would be super. Golden pocket and 702 would meet back the support and resistance line at 18.5. So that would be super sustainable for for this to be the lift out of the bear market. But if this is the lift out of the bear market, we will need inflation data to be on point and to be backing that up. Now, having said that, that's all nice and clear on the daily, and it looks like this is what's going to happen. However, if we change to the weekly, not only do we have a death cross that I talked about last week, but we also have the stochastic on the daily turn down, and we have the difference between the buyers and the sellers decreasing, which means the sellers are becoming less and less, and this is generally what tends to happen when this happens. So a steep drop would follow. Now, that doesn't mean that it can't zigzag as it did here in sideways. It could do that. Of course, it could do that. The weekly is, as you can see, in terms of stochastic momentum, not so sensitive, but quite. How can I say? It's not so sensitive when we're looking at it day by day, but it's indicative of a bigger trend overall. We do see that it does have moments when it could be misleading, so that's why I would take everything with a pinch of salt and have the 4-hour levels guide my orders, my trades. So rather than get caught in what the weekly is going to do in 3 or 4 weeks time, I will be watching the 4-hour levels and how they are met. And in terms of 4-hour levels, the easiest way to look at this is through this peak formation structure. And here is, I left the support and resistance line here because this is where it was back tested and failed this weekend as well. And the target for that would be 19.4, most realistically 18.5, and that would meet the 702 correction, and that would be super. In terms of the 3 levels up, here we are, and again, to me, these are, I have them on the daily because it's easier to see the candles with all the sideways, but that's it. And this is the past 4 hours and the previous red candle, as you can see. Now we had these 2 4-hour red candles, the dips that we had yesterday, and here are the volume candles going up. And again, that's the buying of the dip whale action that I was telling you about. So that would be what again, what would signal the fact that the whales are waiting, lurking in the shadows, to be buying the dip and continuing this rally. They would need fundamentals to be going with that, which means the inflation data should be on their side. Now, again, I'm saying the inflation data just because, again, the market likes more certainty than uncertainty, unless it's predicting uncertainty, in which case it will lift. So when Powell came out and said there is disinflation has started, the market is expecting that to continue. So if the market expects that to continue and the data confirms it, this is likely to maybe do a more shallow correction down to 20.5, which is the 55 on the daily, and then lift up and continue towards the 25-30k area for BTC. We will need to see what happens today and tomorrow. I'll be posting. I don't have the link here. I'll put it up on the chats, and you can find it on the calendar, on the financial calendar. So these would be the areas to be looking at in terms of trading levels. We have the same levels as we've had for the past month. I don't need to make any adjustments at the moment. I could be adding extra levels between level 1 and level 3 here in level 2, separating it for BTC. But I'm not willing to do that because the fibs are levels themselves. So the fibs will be guiding my my targets and also my retracements. Here is where I believe we had a golden pocket order to be filled yesterday. Very close, but not quite. Very, very close. Okay, very close to the golden pocket. Not yet there. Just ever so slightly went up to it. So what I'm looking at is. I wasn't watching yesterday for retracements or for any potential positions. Personally, I was doing something else during the day. However, I will be watching today to see what's going to happen. I am watching today for a possible bottoming out on the 4 hour. I'll let this complete itself and see if I can get a position into a long position for tomorrow. But I'm keeping my eyes on the charts. I'm not in any position at the moment. I'm just watching because to me there are some contradictory readings, and I'm waiting for this to show itself. I didn't catch the best position, which was up around here, and I believe this one here offered a nice golden pocket. So this one here and this one here would have been wonderful positions to catch. I didn't catch those, so I need to wait for the next 4 hour swing. And I'm not going to swing on the 15-minute because swinging on the 15-minute is honestly not worth it at the moment in terms of percentages. It is a very, very small for Bitcoin. It's less than 2.2%. So that's why I'm being very patient, because after this, some more volatility will come for sure. 2%. So I know it looked dramatic, but it wasn't that much of a movement. So just to recap before I move over to ETH. Tuesday, the CPI data will come out and will show the direction of inflation, and that whatever that is, it will give us some direction for the coming month in terms of the trend. Because if inflation is going down, then the bulls will take charge and continue this rally. That's what I anticipate will happen. Then we have the whales that stayed engaged last night and they bought the dip. There were big orders last night being filled. As you can see, big volumes on the 4 hour candles on the dip, which again showed that there might be buyers awaiting for another lift. Then these two would be sort of like neutral towards positive, and then the negative downwards indications would be Paxos and the SEC are coming down. Paxos and the SEC, more like a legal case. So the SEC ordered Paxos to stop issuing their stablecoin USDP. Binance is affected in that, so again that would, for crypto, that would mean we are coming down again with a crypto scandal. And then the weekly stochastic is down for Bitcoin, and that would need time to play out. It could be fickle as well, so I'm taking that with a pinch of salt and considering it as a global trend, because the daily is floored but the 4 hours coming down. So the 4 hour might be needing to get to the daily levels, 20.5, and then from 20.5, if the CPI data is good, we might see a lift. We need to see what's going to happen. What's going to happen in two circumstances: when it gets to 20.5, the 0382 correction and the 55 on the daily, and then what data comes out tomorrow with the CPI. in short, because I want to be quite concise. I'll be keeping you up to date throughout the day and tomorrow as well. So I don't want to be repetitive and tell you the levels that we've been looking at for the whole of the month, really. Now today ETH is where I expect BTC to go to. So the 1512 level got broken, and now we're looking at the 55 on the daily holding. It's not holding really strongly, it's looking quite fragile, and we have an increase in sales here on the MACD. If we are looking at the 1 week, the 1 week stochastic is also down. The MACD is not down yet, but again, contradictory information. The difference in buyers over the past weeks or so, 4 weeks, has actually been positive. So we are looking at the number of buyers going up, which signals continuation of the trend. Again, we're in the middle of the middle, and I'm happy to stay adaptive and out of any position. And if I am to wait for the next one, so shall it be. In terms of the levels, here are the weekly levels, the same as for BTC, same as the ones that we've been looking at. Unfortunately, nothing has changed because we've been in a ranging market, but still are there. Here is the 4 hour holding below the previous support of 1525. It's broken the 382, and I don't think it's going to stop until it reaches the golden pocket around 1350. That would be my limit for a possible take profit. 1322 would be the next one, but 1350 would be a good area to take profit. I don't see anything stopping it in the meantime. Yes, there could be some more sideways. It's worth watching it. But it looks like on the 4 hour we're gonna continue with the drop. On the daily levels, here we are on the 4 hour, so close to reaching the 800 EMA. I believe we will. We have one bullish divergence here on the 4 hour. I haven't checked to see if there are any bullish divergences on the day. No, not yet. What we do have on the day though is we have the 5 crossing over the 200 here for ETH. This is not looking good. Like this to me looks like a peak formation, and it looks like the descent has just started, and we're gonna go back to base or even lower. Because if we are looking at the bigger picture here on the daily channel, yes, we are miles away from the divergence, from this yellow divergence line that we broke, and we headed up from it. If we do break this, then we're looking at going down again into the space. Of course, this divergence would look somehow different, and it would be turned into a different formation on the daily, maybe an extended. You know what? I'm gonna remove this line. I was thinking that I could still keep it, but I won't. It'll actually be a sideways consolidation channel on the daily. This is it. You can see it clearly now. They had it. It had it here, and now it has it here. So it had it here for 1, 2, 3, 4 swings. Here it was 1, 2, 3, maybe 4, and again breaking down to the next level, 500, and that would be really low. But that's it. That would be it if it breaks. However, I don't want to be a perma bear. I don't want to constantly drill home this scenario, because this is not the only possible scenario, and anything can happen in the market at any time. So we're looking at also possibly continuing the lift towards the resistance level at 1680 back again, and then 17. If I accidentally removed my 55. There we go. If the 55 EMA on the daily hold. So we need that to hold as support, and we're going to have the answer today or tomorrow. If you're not in a position at the moment, I suggest you wait, because that would be the best thing to do at the moment. The 1 hour is very choppy. I've stepped away from the 1 hour chart in terms of using it as targets. I'm using the 4 hour as levels and as targets. And it's quite tricky because the orders are coming quite close to the fibs, but not really getting it. I had an order yesterday for XRP at 38.41, and it reached 38.40, and I already put it down one point. So again, it is what it is, and it is where it is. It's the longest, choppiest sideways action we've had in this consolidation and in this bear market. So at the moment, we just need to see how it is gonna play out. That's it for today. The bottom line for both coins is we need to pay attention to seeing any bottoming out structures around the 0.5 or golden pocket level, and we need to be patient and wait for the CPI data tomorrow. That's what the market's waiting for, and that's what I believe we should be waiting for, and seeing what direction the market is going to lift, and then go with it on the next retracement. That would be what I'm looking to do, because it could go both ways. The daily RSIs are floored, they need a little bit of a breather. It could continue to the upside for the next couple of weeks or so, and then reverse downwards. That could happen as well. So that's it. I'll post the timetable for the CPI data tomorrow, and I'll keep you posted if we see any visible, any significant. They're all visible. Any significant push downs until then. Have a good day and a good week, and I will see you guys tomorrow morning.